What's up, guys? Welcome to the Momentum Trading Lab. Please remember to hit that like and subscribe, and let's get into it. Sorry about that. All right, so let's quickly recap the analysis from yesterday. So for the Nasdaq, we had these relative equal lows, and we said that there could be high likelihood that there would be sell side liquidity being built up below these lows. And I kind of expected a little dip into that area to knock out the long positions and then get a move back to the upside. So if we go to the 1 hour and you switch to regular trading hours, we said that we had this new day opening gap right there. So the lower end of the gap was at 15,610. The high end of the gap is at 15,694. And then switching back to the electronic trading hours, then we also have the fair value gap on the 4 hour between these three candles. So this was the pretty strong draw on liquidity for today. And then as you can see, we dipped into that area and now we are starting to move away from this area. So it looks like the next stop for the Nasdaq is going to be in this gray box, this fair value gap. So the lower end of this gap is at 15,533. So we might still see that area taken today. And then the new day opening gap. So we'll see once we get into this area, are we gonna push through it, displace above the high, and that will be an indication that we could go and attack the liquidity above this high. But once we get into this area, we'll move into the lower term time frames to see if we get a bearish market structure shift to the downside, and then we'll play the short. And as we go up, there will be sell side liquidity being built up below the lows as we make our way into this area, and then we'll watch for that market structure shift on one of the lower term time frames, and then we'll look for our short setup and go and attack the sell side liquidity below all of these lows. Right, let's clean this up. Okay, so before we continue the analysis on the Nasdaq, we could go to the 4 hour. So this was the projection for the DXY yesterday. Let's quickly move this to the side. Okay, so we said that we had these relative equal lows. Right, we had one. Let's go to the 1 hour. The one right there and the one right there, with the fair value gap right in this area on the 4 hour. I think we went down to the 1 hour to refine the imbalance. This is your 4 hour fair value gap. As you can see, we are dipping into that area. And we went down to the 1 hour and we refined the fair value gap in between these three candles. And it looks like we got some displacement. Displacement below this low. So this is a could also almost say this is a bearish market structure shift, and we are starting to print a imbalance right there. So this candle closes in 24 minutes, and we'll see if this fair value gap confirms. Then we could see a move back to reprice and then get the move back down into this fair value gap. The high end of the fair value gap is at 104.940 with the lower end at 104.761. So look at that imbalance on the 15 minute. Okay, so this one we have not touched yet. Let's make this a different color. Make it red. Also one right there. Okay, I'm just gonna remove these blue lines. So these blue lines are This is from the volume imbalance that we identified a couple of weeks ago. We got that nice rejection, so I'm just going to remove it for now. And let's go back to the 15. Okay, so the gray box is the imbalance on the 1 hour. Now we are on the 15 minute, and we refine the imbalance on the 15 minute into this red box. There's another imbalance right there. Then I also just want to get my flip tool from the high to the low. I'm going to switch off the extensions for now. Okay, so we have the equilibrium right here at 105.185 more or less. You could kind of see something like this. Pull in the imbalance on the 1 hour and then go down. There's also a chance that we visit the imbalance right here and then continue to the downside. Alright, so to me it looks like during the course of the day, DXY could make a little push to the upside to fill in these imbalances. And here's the one on the 1 hour that we identified. And then make a push into the fair value gap right here on the 1 hour. And then if we get our flip tool back, so for this leg to the upside. Okay, so we are not in the discount area yet. The equilibrium is right here almost exactly at 105. This Fibonacci 618 is here at 104.894. You could see that move into that red fair value gap on the 15 minute and then move down to potentially to the 618 and then get the bounce to the upside. I'm still longer term bullish on the dollar, and we'll have a look at the higher term time frames in a moment. Right, so that's kind of what I see happening potentially for the rest of the day, going into tomorrow for the dollar. So a little move up, pull in the imbalances, move down to the imbalance on the 1 hour. We are already in the imbalance on the 4 hour, and then potentially make a push to the upside towards the buy side liquidity above these relative equal highs and potentially this high. So the high right here is at 105.883, and then the next level that I have is the buy side at 107.993. And then we also yesterday identified this imbalance on the daily chart that is still untouched, and this one starts at around 108.441. So I still think the dollar is reaching for the buy side above these levels. It's just on the lower term time frames, we are just short term bearish because it looks like the dollar wants to just go and touch these imbalances, move into this imbalance, and then get the push back to the upside. So to me it looks like they'll bring it down into the box, induce more short positions above these areas, so buy stops above this area. And then this will then help price gravitate back to the upside as well, with the buy side above this high. Alright, so that's the kind of the summary for the dollar index. The analysis from yesterday still seems intact. Alright, so let's have a fresh look at the Nasdaq. Okay, before I continue, let's just quickly recap the analysis from Bitcoin. So my projection was a move above these equal highs to knock out the short traders, pull in this imbalance, and then get a push to the downside to take out the sell side. and fill in this imbalance and then get a bounce off the Fibonacci 618. That did not exactly play out, so we displaced above these highs. So that is a bullish indication. So the displacement is indicated by this fair value gap. Make that blue. Okay, now we can remove this Fibonacci, or we can just repurpose it for this leg to the upside. Okay, so this fair value gap still touches the discount area. So it looks like a potential retrace to the equilibrium and then potentially move towards the liquidity above these highs. We also have the negative 0.27 extension right above this high, and then one standard deviation of this move will take us to the liquidity above this high right here. So it looks like potentially like a retrace to 26,900 more or less. And then the target would be this high. You will then be targeting the buy side liquidity. Okay, so this level is at 27,573 and 28,142. Okay, so if we have a look at the momentum master B, the stochastics RSI is flipping bearish, the money flow and the RSI pointing to the downside, and then this looks like a bearish divergence on the MACD and the Williams. Make it a little bigger. You can see there's a bearish divergence starting to form. Where's my trend line? Okay, so there's make this nice and red and thick. Okay, now you should be able to see it a little better. So here we have a high and a higher high, and on the MACD we have a high and a lower high. So this is showing a lack of momentum to the upside. And then we have the same starting to form on the Williams as well, a high and a lower high. Let's have a look at the RSI and the money flow. Difficult to see it on the, because it's not really on the RSI and on the money flow, but it's on these two. And I like it to see it on these two because not a lot of traders look at these oscillators, the Williams, and this is a special MACD formula that comes with the momentum master B. So it's normalized, it's a little faster than your standard MACD. So this is definitely a strong indication, these two bearish divergences. So then that's also in confluence with the retrace that we see on the price action. Okay, so just to recap the Bitcoin analysis, my initial projection was a sweep above this high, fill in the imbalance, and then go and attack the sell side liquidity. Then we displaced above the relative equal highs. So now we are kind of flipping from this bearish projection to a more bullish projection. So right now it looks like we are putting in a temporary high to come back into this imbalance towards the equilibrium at 26,892, and then move back to the upside towards the buy side liquidity at 27,573 and 28,141. And then there's also and another one right there, and this one has not been touched at all. Right, so it seems likely little move back, pull this in, and then move back to the upside. Okay, let's I'm gonna delete everything on the Nasdaq and have a look at it with a fresh perspective. Alrighty, let me just get something to drink. Okay, so Nasdaq daily chart. Momentum is starting to reset a little bit. This one still has a lot to go. The money flow is still pretty far away from the RSI, but still pointing up, and it still has move to go, room to go to the upside. Okay, so basically from like I mentioned in earlier in the stream, it seems likely they come for these lows. So it's very rare that they will just keep these lows intact, because why would they do that? So most traders will see this as support. So this, they basically just induce people to go long. Just fix this quickly. So these straight edges will rarely stay intact. So this is just inducing traders to go long and put their stops in this area. And then you can see they bring it down. And how do we know that the larger players bought up all these stops? This move that we are still seeing to the upside. So we are starting to see displacement to the upside from the liquidity pool. So now it is likely that they would want to pair their long positions with the buy stop or the traders that went short. And we also have these imbalances right there. So I'm not sure if we'll go all the way to the buy side liquidity that's built up right there. But like we mentioned yesterday and earlier in the stream, we have some pretty strong imbalances right here there. So we'll have to go to the 1 hour just to get that new day opening gap back on the chart. So this is from the close to the open. Let's see, this is a new day opening gap as it rolls over from Thursday to Friday using regular trading hours. That's your new day opening gap. With the imbalance right here. Okay, so the sell side has been taken. So now it's likely they would, I mean, there was a little high right there, but there was barely any chance for traders to really do anything to put their stop losses above these highs. So any stop losses that was there has now been taken. Then we have a high right there. Okay, so buy side liquidity is also in this imbalance. It already came into it once and now twice. I'm just gonna quickly put it on the chart and then remove it. So it's this one I am referring to. Leave it like that. So definitely one thing that I am going to be watching for the afternoon session is see how we react with this level, because there's also always the chance that we only come back to this area potentially tomorrow. So definitely one thing a potential setup to watch out for is basically just a quick move above these highs, knock out the buy stops, and then for my entry model, go to the 5 minute for that. So this is basically my main entry model that I'm quickly going to show you guys. So step one is always price action must move into liquidity. So we have buy side liquidity right there. And to identify the liquidity pools, you have to look at highs on the 15-minute, the 1 hour or higher. And then strong liquidity pools is stuff like the previous day lows or highs, which we already took, which was this previous day low was right there at 15,356. So this was the previous day low. So this was the low on Friday. Yeah, so sell side liquidity has been taken there and there. And price action moves from sell side liquidity to buy side liquidity to sell side liquidity to buy side liquidity. All right, so this high has been here for a little bit. So it has had the chance to induce traders to put their stops above this high. So I will personally be looking for that move. Something like this. And then the displacement, indicating that the larger players, the algorithm, the market maker, whatever it may be, just bought up all of the buy stops. And that signature will be given to us by displacement below the previous low. That creates that fair value gap. And then we want to see a retrace into premium. Want to change the 0.5 to something that we can see better. The premium is above the 0.5 or the equilibrium. So you want to be targeting a fair value gap or order block in premium for your entry. And then you write it down. And then you want to be matching your TPs with the sell side liquidity below these lows. So this would be a good low hanging fruit target. And there's another low right there. And then we also have these equal lows right there. So this will then knock out a lot of the internal sell side liquidity that's been built up. And that's basically my main entry model. So you mark off the untouched highs and lows on the 1 hour, 4 hour and daily and the weekly as well. And then you basically wait for price action to go into that area. And then you watch for displacement on the 5 minute and lower. So I use the 5 minute to the 1 minute. So you watch for displacement and a market structure shift on one of those time frames. And then you just enter on a order block or fair value gap. So if you are shorting, then you want to see the order block or the fair value gap in a premium. And if you want to go long, then you enter on a fair value gap or a order block in a discount area. All right, but so that will be kind of the A plus setup for this afternoon. If it can take out that high and then displace, but okay, we can keep these sell side levels right there. Let's just align them to make them look nice and neat. And we can delete that. Okay, so we've already been digging into sell side. We had this high. We had this high. So we took this high as well. So if we now start to dump below this low, then we can just enter. Look for order block or fair value gap. So these are the things that I will be watching for this afternoon. That might give us a nice little short scalp. So those are the two potential setups that I am going to be targeting. But what could also happen is, so traders that are going long, that went long today, a lot of them will be trailing their stop. Okay, so they'll kind of be trailing their stop. Okay, so if they come into this area, but there's no displacement, so they just kind of tap into it and then start to displace to the upside, then that will be your indication that they want to see this level repriced today. So that's kind of the three things that I will be looking for. I would like to see us visit this area and then start to aggressively move down, because that's kind of my favorite setup, is getting these reversals of the liquidity pool levels. For this one, we've already went up. So what I would want to see to go long is just tap this low and then aggressively displace to the upside. And then I will take that long. And then we should then move into this area somewhere this afternoon. Alrighty. It looks like we are starting to get that move to the downside. Alrighty, that's my analysis for today. I will be in the Discord. If you have any questions, I will post my setups as I see them during the afternoon kill zone and silver bullet sessions. So if you're not in the Discord, definitely grab the link in the description, and then I will see you guys in there. So with that being said, thank you for everybody that tuned in, and then I will be back tomorrow. Cheers.